All right, today's discussion on Malaysia's economic outlook for 2024. As we look ahead, the country stands at a crossroads of opportunity and challenge, with a projected GDP growth of 4.2% and strong private consumption, and Malaysia is poised for growth. And however, global economic conditions, fluctuations in commodity prices, and also ongoing geopolitical tensions introduce significant uncertainties, and we'll deep dive into the multifaceted dynamics of shaping Malaysia's economic landscape. To discuss further on this topic, our guest ready on the line is Dr. Rosnani Rasul, Chief Executive Officer, BIMB Securities Sdn Bhd. Thank you, Dr. Nani, for joining us this morning. First of all, GDP growth projections. Given the projected GDP growth of 4.7% for 2024, what are the key drivers behind this growth, and how sustainable do you believe that this trajectory is in the medium and also long term?
Good morning, Najib. Assalamualaikum. Salam Madani dari kami di BIMB Securities, anak syarikat milik penuh Bank Islam. Now, let's get back to the economy, something that is very close to our heart. Our projection economy is about 4.7% this year. Among others, that we think that the services sector is fully healed from the effect of COVID-19. Secondly, we think that the technology upcycle will have a huge benefit to the manufacturing sector. Other than that, we think that is going to be another broad-based economic growth for the Malaysian economy in 2024 and going into 2025. This is also in line with the economy Madani target to achieve Malaysia to become the 30th biggest economy in the world. Now, talking about the economy, I think there's a lot for us to be proud of. One, our second quarter GDP that reaching about 5.9% is the best. Excluding post-COVID, pre-COVID, I think the highest since third quarter 2017. Ringgit is doing really well. I think the equity market is also doing really well. I think all cylinders are firing for the economy to reach 4.7%. In fact, we think that there could be an upside risk to our GDP target. It could reach 5% or more. We are looking at a very robust tourism activity. The government is expecting the tourism influx of tourists to reach about 27 million, if not more. This is higher compared to last year of about 20 million. I think, again, to reiterate, we think that all the cylinders are firing for the economic momentum for 2034.
Dr. Dani, I want to touch on the private consumption a little bit. Private consumption is expected to remain robust, of course, but what specific factors do you think will most significantly influence consumer spending, especially in 2024?
Private consumption did really well in the second quarter, reaching about 6% year-on-year growth. That was powered, among others, by the close to 8 billion EPF account tree withdrawal. Other than that, sumbangan tunai rahmah, inflation that remain low at 2%, the almost full employment condition of about 3.3%, and then powered also by healthy loan growth reaching about more than 5%. So all these are very healthy for the economy, and we think that going forward, barring the unexpected, or if there is a reflotation of RON 95, we think that private consumption will remain as a growth driver for Malaysia in 2024.
Dr. Nani, how do you see the global economic uncertainties or global economic conditions in that sense, particularly in major economies like US and also China, impacting Malaysia's economic performance and trajectory in 2024?
Surprisingly, the US did really well. Second quarter GDP reaching about 3%, despite the fact that their federal fund rate has remained at more than 5% for about 2 years. The economy remain resilient, and we take the comfort that the economy is able to go for a soft landing should the federal fund rate en route for the easing monetary cycle, which the decision will announce by today. Other than that, we think that the US will be able to navigate a soft landing for the economy in 2024 and going into 2025. But on the US, the aspect of the US, should the federal fund rate cut, let's say by 2 to 3 times this year, and next year about 4 times. We think that that will actually cushion the economy from a hard landing. So other than that, we think that the GDP is going to revert back to the average, long-term average, about 2% plus. So that is a source of comfort for the demand for our goods. Other than that, we are still waiting to see the impact or the result of the US presidential election. So far, the polling numbers by today, it shows that Kamala Harris is actually ahead of Donald Trump. Should Kamala Harris able to become the 47th US president, we do not think that there will be a lot of policy changes, economic policy changes by Kamala Harris. We think that she is going to maintain the policy by Joe Biden for the next 2 years. However, if Trump get to be the 47th US president, there could be changes here and there, especially on the trade policy. They could have an impact to China. Back to China, we think that the government is doing all they could to actually maintain the GDP target about 4.5% to 4.8%. Definitely, there will be an impact to Malaysia because China is our biggest trade partner and an important economic partner. But we think that they have enough monetary weapon to actually reboot the economy, to support the economy to be 4.5% to 4.8% for this year. And hopefully, it will stay at that level for next year as well.
Dr. Nani, what are the potential impacts of the ongoing geopolitical tensions on Malaysia's trade and economic stability?
So far, we are seeing only two geopolitical tension. One is the Middle East, the second one in Russia and Ukraine, which will enter into the third year. So far, the impact of Russia-Ukraine is quite contained. I think the global economy able to adjust to the tension in Russia and Ukraine. But then again, the situation in Middle East has yet to come to a truce. So that is a concern. But in any case, if you're looking at the Brent price, the Brent price currently trading about 72 per barrel. 72 per barrel is slightly low, but then again, the year-to-date average is about 80, is in line with our expectation and the government expectation. If there is some supply disruption from the Middle East, we think that the US will use their stock to actually stabilize the global oil price. Usually, oil price in the second half of the year is a bit elevated because of the winter season. But so far, we are not looking at that. In fact, the oil price has been trending downwards, mainly because the OPEC plus unwinding of OPEC plus supply cut that could have an impact. But then again, once the US is actually cutting their federal fund rate, which we expect about 2 to 3 times this year, that could actually take a knock on the US dollar. That could actually push the impact of the Brent oil price. Coming back to your question on the impact of geopolitical tension, we think that geopolitical tension is quite contained for now. We do not see a spillover effect. Note that the Middle East tension is nothing new. It has been there since 1970s, since the Yom Kippur war in the Middle East. It has not gone any slower. There has been intermittent geopolitical tension in the Middle East, but we think that the global economy is able to take the stress or the pressure from the worsening global geopolitical tension in Middle East. So back to your question, the impact is that the impact is quite contained. Malaysia has a very broad-based economy. If any, is going to impact only on our mining sector contributing only about 5% of the GDP. I think Malaysia will do all it can to actually reroute the export of our oil to other countries to cushion the impact, if any, from the geopolitical tension in the Middle East.
Dr. Nani, also I want to touch on the economic Madani framework and also other policies announced by the government, such as the NETR and IMP and such. But do you expect that, of course, this is going to drive the economy, but to what extent, in your point of view, and which specific policies within this framework and also other policies being announced by the government will have the most immediate impact?
I think the most immediate effect is actually the labor force participation by the women. to be increased to 60%, currently about 50%. That is easily an increase of about, I think, 100,000 to 200,000 of female in the workforce. So I think that is the one that is going to be the game changer for Malaysia. Other than that, we think that among others, to keep the fiscal deficit to 3% or below. In fact, the 2025 fiscal budget that will be tabled on the 18th of October, we are looking at fiscal deficit of about 3.4 to 3.3 to 3.4%. I think reaching the fiscal deficit 3% or below, I think Malaysia, I think the government is able to manage that, to achieve that within 10 years. But I think the biggest driver to the economic Madani is making Malaysia the 30th biggest economy in the world by 2034. Currently, Malaysia is the 36th largest economy in the world. So I think for us to move the ladder, to move the needle to 30th, I think we can do it, provided that we have a very stable political condition, a very supporting policy condition that is very important for Malaysia. So economic Madani, the trust, there are 7 trusts to this, but I think among the game changer that I mentioned is number 1, number 5, and also number 7. Number 1 is the 30th biggest economy in the world, and then number 5 is pushing the women participation force to 60% of the economy. That is number 60% of the workforce. That is number 4. And as I mentioned, to reach a fiscal deficit of 3% or lower. I think among others, that would actually a fiscal deficit. I think the government is able to keep this next year and onwards, given that I think the fiscal budget will do all it can to actually contain costs, make sure that revenue leakages is actually plugged, namely the reflotation of essential goods like Road 95 or even other goods like sugar and whatnot.
Okay, we have another 1 minute, if we may, Dr. Nani. What are some of the downside risks in that sense for second half of 2024 that we should look out for?
My concern is that the ringgit has been going up too sharply. Currently, recently reached about 4 to 5 per dollar. That would have an impact to the export market. That would have an impact to the tourism sector. So that is my immediate concern. But then again, export momentum, the impact from currency, it takes about lag impact about 6 months. Tourism sector usually takes about 6 months as well. However, downside risk, among the biggest one that I see, if let's say Road 95 is being refloated, refloated is not an issue. Whether the implementation, the cushioning of the economy, that is very key. I think we need to prepare the economy in case the Road 95 get refloated, so that we are able to maintain the economy momentum intact. But then again, we are not seeing Road 95 being refloated this year. We think that is going to be next year. So then again, back to your question, Najib, I think that the balance of risk, there is a balance of risk to the Malaysian growth momentum in the second half this year. We think that the economy is able to reach between 4.7 to 5% this year, barring unforeseen circumstances, for example, like unexpected war, global war, or even if let's say COVID-19 re-emerge, which we don't think so.